Hello, everyone. Welcome to the stock specific class here for Thursday, March the 30th. As always, if you have any questions during the week or any questions that I don't get to here in the live class, make sure you send those to Jerry at TradersPro.com, and I'll be happy to answer those for you. Market started to break out yesterday, but it's showing kind of a bearish reversal candle today. We'll see how it ends up closing, because yesterday it also looked like it was breaking out with a little bit of a bearish reversal candle, and then it surged a little bit into the close. But you know, there's a lot of question marks right now. The market is still indecisive, can't figure out where it wants to go. I don't trust any move right now that it's making, and I don't want to be heavily involved in a lot of trades in this environment. Obviously, I'll take advantage of, you know, shorter term movements here or there. Like I said, if we close a day with a bearish reversal candle, there's a good chance you could have a down day tomorrow. I'll trade those little short term moves sometimes, but you know, as far as trusting a longer term trend, you know, we're just, the way that the chart's kind of forming right now, it still keeps looking like it could go either way, and I don't like to do a lot of trading in those types of environments where I feel like I'm guessing, and so again, it's probably going to be best just to remain patient. I keep saying that these conditions don't last very long. Typically, this one's been unusually long, but it'll pay off, because, like I said, I said this on Tuesday too, if you overtrade this type of market condition, you can really damage your account. Usually, you'll end up damaging your account. Usually, you'll look back on it in hindsight and say, "Man, I wish I wouldn't have done anything." And so the important thing is, when you're in that condition, recognize it and do what you would likely do after it's over, which is don't do anything. Just wait until it starts moving and clearly moving, and take advantage. And it can be down. We know how to make money if the market is still going to continue lower as well. We can use some of those inverse ETFs and things like that. Now, real quickly on the direction alert side, I did have a question on Tuesday, and didn't quite understand what the question was, but I think he clarified it a little bit. So I want to just, you know, a lot of just to make you aware, I go through these indicators pretty quickly, and the reason for that is I'm really only looking for overbought, oversold, at least on these direction alerts, stretched market one way or the other. But you know, if you want to know a little bit more detail on those, if you go into the Learning Center and get to the Learning Center, and hopefully you already know how to do this. If not, this is critical to there's a lot of information that's available to you that you can get. But you click on this little gear button up here, and click on the Learning Center on the drop down. And, you know, these are things that, like I said, you should have already, and maybe you did go through them a year ago or something like that, or a while back, and you just need to kind of refresh what that information is. But go through the get started stuff, and then underneath the TradersPro training right here, you know, if you want to understand the direction alerts. Where are the direction alerts? Here they are, right here. Direction alerts. Jesse has these little quick videos that go in and explain, you know, what you're looking for on those indicators. And then, like I said, in these live classes, sometimes I'll take time and explain what they're showing us. But in order to keep from getting too repetitive every week and taking up a lot of time, I usually kind of skip through it. Now, as far as the changes, so the long-term trend right here, this is telling us whether we're in a bull market, bear market. This is not going to move or change very often. It does have a breakdown here of a -1 to, this is just kind of telling you how far you're moving into that bear market. Are you getting worse? Are you moving deeper into it, or are you coming out of it? Which direction are you moving within this range? Now, once you get past the -5 on the scale there, it's just a severe bear market, and so it can become more severe. But it's not going to go, you're going to max out on the indicator here. And really the purpose of the indicator is just to show you the area of when a change is starting to take place. So now, if you do want to keep kind of following, is it becoming more severe? That's where this line is down here. You can keep watching it. When we crossed below, when we got into an extreme bear market last spring, we dipped below that -5. Here's the -5 right here. And we just kept getting more extreme. Now we kind of bottomed out there in November, and since then we've kind of been on the rise. And as we got close to that -5, this is a couple weeks ago, I said, well, watch for this thing to start moving. It should, once you get past that -5 and start moving towards -4, it'll start moving in this direction, and that's what's happened. So now, what's the significance of the numbers? It's just there's an algorithm that's facing this change. That's basically telling us that this shift is taking place. Again, none of these indicators or algorithms tell us exactly what the market's going to do. That's not the purpose of them. And we can't. There is no such thing that exists. It's just telling us. It's showing us momentum type shifts or changes in the market behavior that's starting to lean more to it, starting to act more bullish as it's moving, is based on the algorithm. Now, it doesn't mean that we couldn't have some big panic sell up, turn around and sells off or anything like that. That's why we look at the individual charts as well. The price action on is that warning or showing us that maybe we could drop or continue to move lower. That's why we look at all of it. No, there's no one thing that I'm going to really look at or focus on to base my decision. I'm like a crime scene investigator. I'm collecting clues. And then once I've collected the clues, I want to kind of make my conclusion as to what I believe the trend of the market is, or the direction it's more likely to move in. And then I can make my trading decision based off of that. Now, those algorithms that we use for all these, whether it's buy, sell signals, strength rank, changes in trend, and the direction alerts, they're all proprietary algorithms. So if you want to know exactly what the data is that's causing it to make that decision, I can't tell you that. We would cease to have a website if we shared. It's like going to Coca-Cola and saying, I really, really want to know what the formula for Coca-Cola is. They're not going to give it to you. And so that's kind of where we're at as far as that's concerned. And I get it. There's people, especially mathematicians out there, you want to know the details, and I definitely understand that. But this website's purpose is to take those complicated algorithms and then try to simplify it into something that, all I really need to know is the market overbought, oversold? Is it shifting from maybe a bear market to a bull market, which is kind of how it's acting right now? When it does make that change to a bull market, does it go to a bull market and back to a bear market? I want to just be able to read that data, what it's telling me. And obviously, this long-term indicator doesn't change very often. But it is in an area now where we will start to pay attention to it, because if it does keep creeping higher, if the market keeps moving higher, we're going to get close. This is the line right here where you get above that line. It's a bull market. And by the way, we've gotten when just a little over a year ago, we were in a very long extended bull market, and we were at the far right side of this range. And we're stuck there for many, many months. And even when the market started to sell off, it took a while to alleviate that overbought bull market condition and had it start to move back the other way. So again, that's 15-second explanation there on how that works. It took 10 minutes to explain, but how does the long-term market timing signal decide to say bullish? Again, it's an algorithm that's determining that, and then what, based off of that, down here it'll have a phrase to go with that reading. So right now we're mildly bullish in a bear market. That's exactly where we're at. Where market's trying to rally. It's kind of a stagnant type of rally, but it is a little bit of over the last few weeks, the market has been kind of inching its way higher, and so then it gives you, traders should consider trading with a neutral or bullish bias, setting tight stops. So it just gives you a little bit of a recommendation based off of what those readings are showing you. Okay. Now, also keep in mind that the software is designed to really make it simple for someone that doesn't really want to learn how to trade. They just want information. They just want to place some trades. They don't want to be trading experts. Maybe they're a professional in some other area of their life, and just tell me when the conditions are good to start buying stocks. I'll start buying stocks when I shouldn't be buying stocks. But for those that want to go a step further and learn how to read price action, read chart patterns, we can add more to what this data is giving us and make better decisions because of it, more precise decisions if we're willing to learn how to recognize other things. So if you see me maybe I take on a few trades in the conditions haven't turned completely bullish yet. It may be because I'm recognizing a certain chart pattern, an inverse head and shoulders pattern or something like that, and I'm recognizing that the algorithms haven't switched over yet, but the chart pattern is showing a bullish pattern, and I'm maybe getting in a little bit early before those things all line up. So again, it's just to assist you. Everyone's going to have different styles, and I talk about this all the time when it comes to confirmation. How much confirmation do you want? It's not a matter of really how much confirmation you need. It's really understanding the risks of the confirmation you're looking for. In other words, if I have an ABC pattern, what looks like an ABC pattern, I could get just an up day right down here where I think that ABC pattern is done and it's starting another move higher. That's not very much confirmation, but I can also put my stop right below here and say, okay, that I have very little risk. I don't have much confirmation, but I have very little risk if I'm wrong. Now, I could be wrong a lot more often because I'm not getting more confirmation that it's going higher, but I'm aware of that. I know that I'm taking a little bit more aggressive approach. And the reason why I'm doing that is I want a potential bigger gain when I'm right. I don't want to give up because extra confirmation is there's a cost to it. If I wait until this stock comes all the way up here, now this would be stronger confirmation that the stock is going higher. It's done with the correction. It's breaking out to a new high. That's a stronger indication we're going higher, but it might cost me $5 to get that extra confirmation. Right? So now maybe my purpose is to get stronger confirmation. I don't know what I'm looking for. I'm not confident in my ability to read ABC patterns, for instance, but I know breakouts, and so I'm willing to wait for that extra confirmation and pay that extra cost for that extra confirmation. That's the purpose. So that's what it comes down to, is understanding your decision. I know when I'm, and so the algorithms are designed to make it as simple as possible, but they're also going to be, there's going to be a cost to some of them because they are going to be, you might have to wait, you might lose $2 of the move before it actually flips over to the buy signal. You might see the ABC pattern, you might see the bullish candle, but if you're waiting for that buy signal, it could cost you an extra $2. Now, for you, that might not be worth it. You might say, man, I know how to read this. I know how to read a candle, a bullish candle before it flips to a buy signal. I'm going to get in right now. Whereas if you're a professional that doesn't have time to learn that, you're saying, hey, I'm willing to give up the $2, but I just want it easy. So when it goes to the buy signal, that's what I'm getting in. So hopefully that makes sense. So, all of this is designed to kind of guide you, but it doesn't mean that you can't make earlier decisions. And for this class, I'm assuming everyone in this class is wanting to learn how to read some of the stuff, which is why we do extra things. If all I did was come in and just say, oh, the software is saying this, after a week or two, you wouldn't even need to attend class anymore and be boring in class, because all I'm going to do is tell you what the data is. I'm going to show you what the data is, what the software is telling us, and then I'm going to go into the charts. That's why we look at the charts, and then we want to see, okay, is the market looking like it's bullish, like it's going to go up? Okay, that's what I want to start adding into the portfolio. Now, this will all be different. This class will be so much different. I keep saying it. It'll be so much different when we're back into a bull market, because there'll be tons of activity. We'll be wanting to add to that portfolio and to jump into new trends, and the conditions are going to be such that it's more likely that our positions are going to go higher. Just to give you an example, if you go into the portfolio, I started it. I think it was like July of 2021, somewhere in that range. And for that last part of the bull market, we quickly went from 100,000 to basically about 130,000 or something like that. 130, maybe it's 135, but we've been stuck in this 135 to 142 range, mostly because we've just been in a bear market. And again, my goal in a bear market is don't give up what you've made. If we can make a little bit of extra money, and we have, but we've kind of sloshed back and forth. We made a little bit, given back a little bit. But what's going to happen is once we get back in that bull market condition, I'll be loading up the portfolio again. We'll be up to 200,000 or something within another year or so, and these classes will be a lot more active. They'll be not only will we be finding potential trades, but I'll be adding to the portfolio. I'll be adding them to the watch list. But it's just, but hopefully this last year that you've attended, you're learning how to maneuver in a bear market. What do you do in a bear market? Again, you got to force yourself to be patient. Now we have, I've shown you how you can use some of those inverse ETFs to make money when markets go down without having to short. I don't like to short stocks. But yeah, definitely these classes are going to be different once we break out of this bear market condition. I don't know when that's going to be, but we're getting closer, so that's the good news. All right, so couple things though. Momentum is picked up a little bit here. We're kind of right in the middle here, but we're not in any sort of extreme range. That tells us that we could still go either way as far as the stretching overbought or oversold in the market. One thing that concerns me is that we've been rallying a little bit, but what's really been sluggish is the breadth indicator. Now, breadth is telling you how much participation there is. And it's really, it's not a secret that there's only been a few stocks that are basically leading this rally. It's mostly been the big cap tech, and when that happens, hold on just a second. All right, just give me a second here. So when that happens, it's not a healthy market when that's happening. Okay, because you've got you've got a couple of stocks that are holding everything up or making it look like everything's fine, and as soon as those stocks start to reverse, that's when you have to watch out for. And I'm going to show you an example of this here in just a second. But you see, it's been lagging a little bit. That's not a great sign. And then I'll show you on the price action today, as long as it's still. I mean, then that could change between now and the market open. These candles aren't, you really want to pay attention to what they're looking like during that last half hour of the trading day. But so most of today, it's been looking like a bearish reversal day. So although the markets are showing that they're up for the day, that's not telling us the whole story here. So I'd like in a healthier up market move, I'd like to see breadth up there with momentum. And not lagging. And this is the way it's been with individual stocks. So I was looking for trades. There's not a lot of patterns out there that I like. Here you got a market that's breaking out of the range I told you about on Tuesday, and yet, there are not a lot of patterns on going through the sectors that I really like. So that's concerning me a little bit. All right, and then sentiment. I keep talking about this. And why is this a problem? It's all the way to the right side. This is what you would see. This is what you would see when you're at the top of a bull market. Sentiment extreme. No concern at all that anything bad is going to happen. The market's going to sell off. We're seeing this not only in a bear market. And it can hit extreme in a bear market, but usually that's going to be within a rally within the bear market. So it's rallying up. You might get an extreme sentiment range. But that's the problem is we've been stuck in this range up here. And then, we have this bank crisis. Even with the bank crisis, it didn't shake this out. Now, I keep hearing people talk about how the market is overly bearish right now, and that's why it can't drop. And I think there's some truth to that. But the market, I would actually characterize it as not the market is too bearish. The market is too complacent. Because there's not any fear, and there hasn't been any fear in the selling. I don't care what anyone says. Even during the bank sell-off a couple weeks ago, there was not fear. We had just barely started to get to fear in that VIX right at the end of that selling. It wasn't panic selling. It wasn't extremely fearful selling, not even close. And that's why I like these indicators, because these indicators tell us, these indicators aren't the opinion. These indicators are telling us what's actually happening. And so this worries me because there's a disconnect. The market just is not hearing, and again, I'm not a big, I'm not going to base my decision on the news or my opinions of the economy or the Fed or what they're doing. All I really care about, I'll share my opinions. I do that sometimes in these classes, but what I really care about and what I trade is what is the chart doing? What are the professional traders actually doing based off of those conditions? And right now, they're just not fearful or worried about anything. And you can see that disconnect. You can see it here on the combined chart. So the blue line right here is that sentiment. You have sentiment way up here in the extreme. You have momentum, which is down. So we come down. So typically what will happen is when you get to a market bottom, you'll see sentiment down here up below market breadth and momentum. And so you have these indicators come down, but sentiment just stayed high. It did come down a little bit right here, but it stayed elevated. I mean, this is just fractured right here. You got breadth all the way down here, so very little participation, a little bit of momentum picking up a little bit, but extreme complacency. when I keep saying that this is showing that something big is about to happen. Some big move is about to happen. Either we're going to start charging forward and the market's going to turn very, very bullish and everything's going to be chasing to the upside there. There's already high, but sentiment will stay in that high range. Or what I think is more likely, we're going to see this come down, and that means we're going to see some sort of panic sell-off that takes place. So hopefully this is a little bit more of a visual explanation of what I keep talking about. Now, again, this is why you're not going to base a decision off of that alone. I can't go short the market right now just because it's looking like something big's about to happen. But I want to recognize that this is what the data is telling me. So what would be a good strategy to implement that I could do right now based off of that? Well, first and foremost, don't be in 30 stocks. Okay, at least not long 30 stocks or whatever. Get to cash. Not saying you have to liquidate everything, but get mostly into cash to where, because that, if you think you're going to get a big signal to get out, your signal is going to be the Dow's down 2,000 points and your portfolio just got cut in half. And now you can start selling because that's now the market's open now and you can start your selling. That you're not going to get, markets always fall a lot faster than they rise. You're not going to get a big warning. This is your warning. Okay. This is your warning right now, not to be too loaded up. Now, again, it could be months. This is not an immediate indicator. It could be, 2 or 3 months from now before we see a result from this. And like I said, and maybe it changes. Maybe we see all this catch up. The market just starts taking off to the upside. In that case, then you start adding back in again. And whatever the trend is, we'll follow the trend. But I also don't want to ignore some of the warning signs, and this is a warning sign right here. Okay. You could tighten up stops a little bit. There's things, defensive action that you could implement. Now, could you buy an inverse ETF? It's too early for that because, especially when the market is kind of broken out of a tight range to the upside of a tight range it's been in. That might be a little bit early to do more of a direct bearish trade off of this. But that's just it. Some of these clues are very broad. Some of them are immediate. That's why I want to know how to read candles. Candles are immediate, but they're not long term. They're just the opposite. A bearish reversal candle only means that it should drop tomorrow. Not that it's going to drop for the next 3 weeks. Now, there could be a bearish pattern with that bearish reversal candle that might tell me maybe a drop could be 2 or 3 weeks or something like that. But this is, so that's, again, I'm collecting clues. There's not one thing that's going to tell me what I want to know, but if I can collect enough data, then I have a better picture of either it's time to get in, it's time not to be in, or it's time to get in, but be cautious because, it may not last very long. That's the benefit of all this stuff that we're analyzing. Buy-sell ratios, again, this is just simply taking the amount of, right now, there's 2,097 sells versus 994 buys. That there's the more stocks have sell signals than buy signals right now, and it's kind of, and you expect that to happen when markets kind of come down a little bit. But here again, this is a sign of that breadth. There's few stocks that are leading that rally. We're seeing the sells outpace the buys while the market has been kind of moving a little bit higher. And again, that's not a great sign right there. But as far as overbought, oversold, this is alleviated. We're a little bit extreme right here to the oversold side. With that wider range. So we are seeing more stock. Actually, more stocks are moving from sell to hold. That's what's causing this to drop down a little bit. But we're not seeing them transition into buys yet. We'd like to see these flip over. This is a good signal that you're in a nice, healthy, bullish trend because now your buys are outpacing your sells. A lot of those stocks are now moving from hold to buy, and that's all this data is showing you right there. And again, we can simplify it by just simply looking for extremes or crossovers. Obviously, it's a good sign if the sells cross below the buys are crossing above the sells. It's showing a bullish momentum change there, that the more stocks are going to those buy signals. And again, what is the buy signal? It's an algorithm that's deciding that, turning it from buy to sell, and it's designed to try to simplify the price action. All right, this sentiment indicator is in the middle. Now you can look. This is looking at the sentiment of the whole market. You can look at, for instance, the Nasdaq has been outperforming. The Nasdaq is a little bit closer to an overbought condition. It's a little bit closer to that red line, but not quite there yet. So there's still room where it could rally a little bit further. You know, you could look at just the S&P index, but usually I'm just worried about the whole group. I'll just use the, you know, I'm just looking, and we're not in any sort of extreme. We're right in the middle. So this is telling me that we could go either way. All right, let's take a look at the charts. Yeah, the software has been around for a long time. You know, the algorithm's correct on that. The algorithm's correct. The market is complacent right now, and it's been complacent for a while. All right, let's take a look at, and with some of these things, you know, those of you that watch this class every week, you know, I'll usually point it out down the road. You know, I'll have a class, I'll be like, hey, 2 months ago, we were getting that warning signal, and today is the result of that warning signal. You know, I'll usually point it out when it happens. I can't always remember the exact class where I talked about it, but you know, if you're taking notes or whatever, jot it down. Jot down the date. That's what's nice, is what confirms. I can tell you when these warning signals start flashing, and I can tell you sometimes they don't always signal something, but you know, it's not always the case. Markets aren't that predictable. We can always know what they're going to do, but it works enough times to where all you need to do is see it happen a few times, where it's like, you know, suddenly a week from now we have a big market sell-off, and you're like, wow, that's incredible. It was telling us ahead of time. Now, again, it's not exact. It makes it feel like it's exact because it did what it was predicting. But you know, that's where human nature jumps in, and you try to assume that it's telling you perfectly every time, when no, it's just warning you of conditions. But I got strong market conditions that a crash was coming about a week and a half before the COVID crash happened, and it wasn't related to, because if you remember, COVID was getting bad, but it was not panic yet, right? It wasn't like freaking out yet. But there was behavior going on in the market underneath the surface that these algorithms were picking up, that something big was about to happen. If you go back, and I don't know if it's still archived, but if you go back, it's about a week or so before that COVID drop, I was talking about it, and I was like, hey, I don't know, something big is about to happen. I don't know when it is or what's going to happen, but it's going to be pretty soon. And then bam, it happens, and you're like, okay, then it confirms what the warnings were showing you. And it wasn't just the sentiment indicator here. There was a number of things. It was a chart pattern. It was price action. It was a lot of these different things. All these clues were coming together that were like, something big's about to happen. And because we don't get these big moves very often, you don't get that all the time. So when you do start to see these things line up, these signals line up, I have a tendency to pay attention, and I usually will talk about it in the class. I'll be like, hey, look out. Something big's about to happen here. So, all right. What we were looking at last Tuesday was we were focused on the candle from Wednesday, the 22nd? Yeah, not yesterday, but the previous Wednesday. We had that big down. That was the Fed meeting. We had the big down day. There's a high probability we should have dropped off of that or continue to drop off that. We didn't, but we spent the next 4 days inside of that candle. And I said we need to break out of that. And what happened yesterday is we gapped up right to here. But then about mid part of the day, we actually were trading lower. We were down right at that breakout area again. I thought, man, if we move back below that at the close, that's not going to be very good. That's not what you're looking for. You're looking for a close outside of that range. Now, luckily, it did surge a little bit into the close. The problem, though, is that when we did close higher, and it did close out of that range, which is what we're looking for, but the volume was average. In fact, it was maybe even a little bit lower than average. And again, and this has been the problem is we're every time you think you're getting confirmation up or down, it immediately shows you the opposite. Whether it's in the price action or the chart, you break out and you say, okay, this should be more bullish, and then it's right back. And in this case, the volume should have been there. If everyone's been waiting, because a lot of people have been talking about this area. We're not the only ones seeing this. And you would think that there'd be a surge in buying if it was breaking out of that range. Now, again, what's bothered me during this whole upward move right here is the choppiness of the move. This looks corrective, the way it's behaving. The problem is, though, is that this was impulsive. This is acting corrective, but now you're beyond that 618 retracement level. You're way up here. The probability of it rolling over and dropping is diminishing each day it goes higher. But then you look at today, it opened higher and now it's trading lower. So although it's showing it's up today, it's showing it's up compared to where it closed yesterday, but that's a bearish reversal candle. So you see the conflict here. It's like, okay, we keep inching higher and it's like the market wants to start getting more bullish, but every time it's acting more bullish, it then throws in a pretty bearish pattern in there. Now, remember, these candles are very short term. If this closes like this, my interpretation would be tomorrow should be at least open lower, or it should be lower at some point in time tomorrow. Now, it could gap down and then reverse right back up again. You know, if you look back here, this is a bearish candle, but immediately it stopped, and there was a little bit of a bullish candle right now, although it was an inside move there. But, we've seen a lot of this. This is a bearish candle, went down one more day and then right back up again. There's just not a lot of follow through. And even to the upside, what looks like it's going to take off right here. It looks like it's going to take off, and immediately it gives a bearish reversal and it heads lower. Just there, we back out of this picture here and we just haven't gone anywhere. Here's the beginning of the year. This is where we've been stuck. We're not going anywhere. And, until we do, we don't want to be, I don't want to be jumping into that. I was ready to, have a bunch of, maybe a couple new positions for the portfolio and all that. But then, the very next thing is you're seeing a bearish candle. Now, we've got another hour before the market closes, an hour and 15 minutes or so, and that could change. It did yesterday. It was looking weak, and then in that last hour, it kind of surged into the close, and I'll watch for that. Maybe that changes. But that's been part of the problem. And then on top of that, you throw in the VIX, and the VIX is already down below 19, or was down around 19. 18 is about where you'd expect the market to start selling off again. And then even that on today, we had a little bit of a bullish reversal candle on the VIX. Now it's faded a little bit, and maybe that means the market could rally a little bit into close. But even if it does, how much further are we going to rally? And what I would immediately look at too, if we go back to that S&P chart, is this is going to be a lot of resistance up here. From that high to these highs back here, these were all major reversal areas, support right into here. Now, if we can break out above that, then I think the market will start taking off, because I think it's going to clear. That could be why we're still stalled right in here. Is it's like, okay, we're getting these little bullish signals, but we're still in this whole congestion area, the same area we've been looking at for months and months, it seems. We can break out above that. But if we can't, especially when you line that VIX up, the VIX is telling me I can't see it breaking out above there. It's not going to have the momentum to break out above there. Not that the VIX can't get below 18, but it usually doesn't get below 18 unless you're in a strong bull market. We're not even in a bull market. And so you're looking at just the opposite. You're looking at it when it gets down that low, that's marking a top. And that's when you could be more likely to roll over. So, maybe I could see where maybe we rally up into here and then start to move down. But like I said, there's no strong bearish signal yet that we're going lower. So I don't want to be shorting anything too heavily right here. Again, doesn't mean I can't do a put option trade overnight on a pattern. If I think, if I had a bearish reversal candle, if this formed a bearish reversal candle today, and I saw a nice bearish reversal candle on an individual stock, yeah, I'd buy a put option on it, see if I can get a move down overnight or something like that. But with the combination of these conditions, we don't want to be doing too much just yet. Now, again, that could change very quickly. By Tuesday next week, we could either be down here selling off and looking like we're going to come down below these lows, or breaking out above this area where things are turning a lot more bullish, or we could just be hovering sideways for another week going nowhere. The bottom line is that we're just not getting a clear signal as far as direction. A lot of mixed signals. And now, the problem with mixed signals is either you recognize they're mixed signals, or you start grabbing onto the signals that match your current bias. Hold on just a second. And so, if you are bullish and you're only looking for bullish signals, then you're going to say the big move was the move yesterday out of that range. This is no big deal. Jerry says these are very short term, so maybe we're down a little bit tomorrow, but we're going to take off next week. Or you can start putting in your own opinions in there, and you can do that with any bias direction that you have, and that's what we're trying to do. The opposite of that. We're trying to. You remember what does a crime scene investigator do? He doesn't determine the crime. He doesn't walk up to the crime scene and said, "Oh yeah, the guy stabbed him 3 times and then shot this guy over here." No, he analyzes every clue. Where are the casings? How's the body? Where are the blood patterns? I know I'm getting a little graphic here, but he analyzes everything first, just so he doesn't inject his bias and get the wrong conclusion because he assumes he already knows what's going on. He collects every clue first, and then he goes about making his conclusion. And we need to do that in our trading as much as possible, in our analysis as much as possible, is to try not to carry too strong of a bias into it. And what you'll see me do too a lot of times is I'll look at the opposite side. I'll force myself to look at the opposite side. Well, what would turn me more bullish? Well, like I said, a breakout above here, I want this to start looking more impulsive. I want it to start looking up, 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 not choppy back and forth. That's corrective. And sometimes that happens. Right here it happened where it looked corrective. You had this move down. This is what really threw me back in December. It looked like we were going to head lower. And then it didn't, and it moved up a little bit sharply right here and then dropped. And then right through here was a little bit more of an impulsive move right through here where it just went kind of up, 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 up. So this could morph into a more bullish looking formation, but it would need to start acting that way. And it doesn't have to be big moves. In fact, just the opposite. A strong bullish trend is one that just moves steadily every day. It's like it's not up big every day, but it's not only up each day consecutively, but a lot of stocks are participating. There's a lot of almost every sector is moving up with it. And that's when you have a lot of confidence that the market conditions are bullish, is you get that participation. What do we have? We have just the opposite. We've got few stocks that are leading the way, and that market breadth is really lagging everything right now, which is not a healthy sign. All right, Dow broke above its trend line right through here, broke above that yesterday, but again, it's got a little bit of a bearish reversal candle. This again looks very corrective, not impulsive. I would have liked to see that look more, or start to look more impulsive, but you can't ignore the breakout, and so you want to see, is that breakout going to hold? Now, what would be bearish is if it comes right back below that breakout, both on the S&P and the Dow. If it comes right back below this, then that was a false breakout. It's trying to suck people in, didn't work. Now it could resume that downward move there. All right. And I'm not going to go through all the charts again. I did more of that in-depth analysis on Tuesday, but I do want to point out a couple. Again, S&P or the Nasdaq's breaking out above. We were looking at this area, and it looks like it's breaking out, but again, a weak candle, not showing a lot of strength on the breakout there. That could change. It could change. It could start just taking off. It's possible, but you see that type of behavior, and it makes you immediately start thinking, could this be a sucker's breakout or a false breakout? What I'd really like to see is the Russell outperforming, because that's a big reason why we're down, is those regional banks. I mean, all what the Russell is showing me right now is it's just all it's been doing is alleviating that oversold condition. It dropped so far so fast, and then it's just correcting it right through here, consolidating right through here. Is it consolidating for another move down? Could be. Is it going to consolidate like it did right through here and then start working its way up? So this is back in December, and you can see that this did look more impulsive on that first move as it kind of broke out. Now, a lot of this is hindsight too, because back here, this looked like we were heading lower, and then it broke out a little bit right here, and then he had a bearish reversal candle. So that could be what's happening, is we're breaking out, bearish reversal candle, and then it takes off. That could be what happens here. But I remember right here, I bought some puts thinking that it was going to head right back down. I still was looking at this as we had this trend line that was lining up right there too. And I got burned on that. It broke out higher. But that's something I'd like to see on the small caps, is do they start leading the way? They start taking off and showing that everything's recovering, or is it going to do the opposite, where we break the support and it becomes the first index to hit the October lows? Not that far away from the October lows. That'd be very bearish if that were to take place. Bonds still look like, I still am looking like this. This is a bullish ABC pattern, had a bullish reversal candle yesterday, a little bit of fall through to that today. By the way, this is something you could add into, portfolio. You can buy the TLT like a stock. That's what this ETF is. You think bonds are going higher, you could buy that like a stock. Same with things like gold and things like that. Gold still looks bullish. Oil came right up into this area here and had a bearish reversal candle yesterday, and then it's back up above it again. I don't know if this is a bearish ABC pattern or if maybe oil's going to work its way back up to the upper part of this range here. We're at a critical area right here, so there isn't necessarily an exact spot to look at. There's a little bit of support right in through here. You got a little bit of a support zone or resistance zone. See if we roll over and come back down, that's bearish. If we can break out above this zone, that'd be more bullish. I'd probably look to these highs as the next target. Dollar continues to move down, which is going to be more bullish for gold and oil and all that stuff. We looked at the VIX. Chip stocks are still looking like they're breaking out. Transports have a little bit of a bearish reversal candle today. And Bitcoin just kind of looks like it's still kind of consolidating there. All right, stocks. There's one in the new buys that I liked. This APLS, Apellis Pharmaceuticals, or something like that, 95 strength rank. And more than anything, I just like that, these kind of bowl-shaped moves. You could also look at it as, there's a lower high, a lower low, and then it's gone to a higher high right here. And you can manage it. Here's where you're wrong. If it comes down and goes to the low down here, so you can manage that. If it breaks out, if it does move up and it breaks out, again, you can take the top of the bowl, the bottom of the bowl, and project that upward as a target. I like the way that pattern is looking. We go into the sectors, computer and technology. I like this Aspen Technology, AZPN. I know this has come down quite a bit here, but again, I do like stocks that have come down like this. They already come down, and now they're looking like they're starting to act like uptrends, a higher low. It broke this trend line right through here. Now you could look, it's right up against here. You could wait for it to go to a higher high to get that little bit extra confirmation out of that. Wouldn't be a bad idea in this market environment to wait for a little bit of extra confirmation there. But if it could do that, then you could buy the breakout there, put a stop down below here. Yeah, so it's getting real close. Had a nice up day yesterday, but not surprising it might stall out a little bit right here as it tests that resistance. Does it break out above it or not? Oh, remember, I wanted to show you, because one of them I talked about, I can't remember if it was last Thursday or maybe it was just last Tuesday. It was recently, this Rambus RMBS was one I went over. And it's breaking out. Now, this is always the challenge of, this would be the downside of, do you wait for the breakout or do you, because sometimes when it breaks out, it explodes through it, and then the danger is that, you have another big up day here. I don't know that I would chase it on two big up days like that, because what could happen is that then it could come back down and retest the breakout. It could pull back. If it pulls back in this area, retest it as support, you have another chance to get in. But that one, again, it looked like it pulled back. It was moving back up to this area here, and then it kind of consolidated along there. I like those type of patterns. And another reason why I wouldn't chase it is you could, when you have a pattern like this, kind of that bowl pattern, you take the top of the bowl, the bottom of the bowl, project that distance upward. We're right at about that distance there. So this would be an area where it might come back and retest the breakout. So I don't know, I'd chase that, but I just noticed that. So I thought I'd point that. That was one that we had talked about a week or so ago. All right, let's go under business services. And I think we covered this one, I think on Tuesday, PAYS, but I still like it. It looks like it's in the consolidation right here. Need it to hold that kind of breakout area if it can. And you could wait for it to go, wait for it to go back to a buy signal as additional confirmation or something like that. It probably has a little ways it probably won't hit a buy signal until up around here. And what I'm basing that on is, and this is where you can see how close it is to switching. So it would need to get over to here to switch from hold to buy. It's on the left side of that halfway point. So it probably needs to rally up into this area here before it gets back to a buy signal. So this is valuable up here because it may have a hold signal, but it might be right here. And maybe it has a nice strong bullish candle. Okay. And you might say, okay, hey, I'm going to go ahead and just get in right today. I like the candle. I like the price action today. I might be jumping the gun on the buy signal, but it's probably going to go to a buy signal tomorrow off of that strong price action today. I can see it's real close. This is where, you know what you're looking for. You can maybe get a little bit of an edge on someone that's just, they don't have time for that. They just want to see, is it gone to a buy signal? I'm going to get in when it goes to the buy signal or what have you. But you'll see me do that, especially when we get into the trades and start adding a lot of stuff to the portfolio. I'll see something like a bullish candle. It won't be a buy signal yet, but I might go ahead and just get in because of I like what I'm seeing for that particular day, and it looks like it's eventually going to go to a buy signal. I might jump the gun on a few trades from time to time based on what I'm seeing, and I'll explain it in the class. I'll say, I'm going to go ahead and get in on this. This is why, and then I can hopefully teach you how to look for kind of the same similar things if that's what you're looking to do. All right, let's do one more. Industrial products. Like this, where is it? LECO, Lincoln Electric Holdings, 91 strength rank. And again, here's a impulsive up, corrective, impulsive up. This looks corrective. Or could it come down further to that breakout area? Yeah, but you're also starting to see it. Here you had, if you draw a trend line down through here, it broke the trend line. You had on your, if this is an ABC pattern, on your correction, you had lower high, lower low, lower high, lower low, and you barely have a higher high right here. And you could wait for it to go back to a buy signal. This one, again, needs to go a little bit further, probably hit a buy signal up in here. And that'd be pretty good confirmation, especially if it moved straight up into that and gave you a buy signal. You're now clearly gone to a higher high above here. And this looks like a corrective pattern, correcting that move up. And if it's done correcting, this thing should take off and break out higher. Now, a lot of that might have to do with what the market does. And that's why, you have to take that into account. We got an indecisive market. It could go either way right here. Take that into account when you're looking at at some of these positions here. So I had a question here on Newmont. Well, gold gold chart looks like it's moving higher. You got a little bit of a wedge formation here, and a little bit of a resistance. If it can break out above here, that'd be pretty bullish. Obviously, if gold continues to move higher, you're going to see these gold miners continue to move higher. And then the other one was A. Is it AU, I think? Or AY? I don't know if I got that right. It's AU. I wouldn't chase it here. This is a gold mining stock, but again, it's an extreme overbought range right here. It is breaking out, but when you break out and you're stretched like that, usually you're going to come back. You're more likely to come back and retest the breakout or move sideways, consolidate a little bit, and you don't want to. I wouldn't chase that. Not right there. But that's just it. I mean, these stocks will give us, if it's going to continue to trend up, you'll get other opportunities. I just wouldn't chase it right there, just from the probability standpoint. It's in a position where it's more likely to go into a correction of some sort. Doesn't have to pull back, but it could move sideways for 2 weeks or something, and you don't want to be jumping into something where you're just going to be sitting sideways doing nothing for a few weeks. So I don't like an entry here on that. All right. If you have any additional questions, make sure you send those to Jerry at TradersPro.com. Have a great week, and we'll see you Tuesday for the next market update. Bye now.